Today is Monday, June the 3rd, and we can see from these relative trading volume bars that we had lower than average trading volume in the Dow and in the S&P, just a little bit lower, but NASDAQ suffered the worst loss of the day, and it had a little bit higher than average trading volume. And there were a few pundits who were saying it was because of increased regulations possibly around the world on Facebook and Google. Could also be that Apple got nailed at about 2 o'clock, 1 hour into their WWDC keynote, but that was also the same time that Fed person Bullard, Governor Bullard, was speaking and sort of seemed to pull the rug out of the market on lower rates. And that's when you see this decline right here in the Dow, in the S&P, and in an already declining NASDAQ. Decliners were behind advancers. So advancers actually finished up 53 to 42% for the day, which is going to put our stock breadth tomorrow. It may not change it. To get a change, we needed about 439 difference in the number of shares that are, number of symbols that are tracked by McClellan. It's certainly not the same number as we see in FinViz here. So we may see a little bit up, we may see the same, but my guess is that before this is over, we're going to get down to this type of an oscillator reading, which is minus 200, which we saw here in May, which we saw here in March, and which we saw back here in October. So now let's look at some stocks. The S&P, the weekly chart is the one that we want to be looking at, but the daily shows us that we almost hit a Fibonacci pullback of 38.2%. That's from this point to this point. And we actually could put it here, but I choose to put it on this candle, which sort of the average between these two. They're very close together. If there was 3 of them, I would take an average if they were all close together. The Chiku span tells us that we can go a lot further before the week is over. We could go down to as far as striking the cloud here at 27.06. But let's look at the weekly, because that's going to be the tell for us. And that's why I am still long July puts now, because as the market opened, I saw some profit in my puts of only a few $100. But I did see an opportunity. I saw this opening candle here in the S&P 500, so I took my puts off and I put them back on pretty soon. I had August 19th and I ended up switching for July 12th. And instead of 270, I took 274 puts. I still think we're going down. Now, we satisfied something else that we saw in the weekly. We saw touching the bottom of the flat cloud with the candle. But we could just cascade right off here, and we could come down and start flirting with this flat cloud here, which is just below the halfway mark of that same Fibonacci retracement. And what do we see in the Chiku span here? Whoops. What do we see in the Chiku span? We see the Chiku span right here. Let's put the, we can't really, there it is, right? It's right in here. So it's right in the middle of this top of this candle. It's below the 200. So the next place for it to go is to the 8 EMA. And since this is a weekly, we could see a drop to the cloud here of 2693. We could close the week at 2700, but just at some point in the week come down to 2693, 2694. And that's why I have puts in the SPY. Apple, let's look at the daily. Got rejected off of the 8. A couple of things happened today, so let's look at the 15-minute chart. Let's look at the 5-minute chart. And the 5-minute chart was resistance at the end of the day, was resistance in the middle third of the day, was support for the early part of the day. We just never reached our 15-minute opening high, which is the top of this green zone, which we saw in the second 5-minute candle. So this is the first 15 minutes, 5, 10, 15, and that defines the low and the high. Actually, we should have a wider than one there, shouldn't we? But anyhow, we dropped below the opening of the day at about 12:15. At 1 o'clock, when the WWDC keynote started, we saw it creep up, and then we saw this massive, well, we saw this big jump up, which you would think that was something that was said by Tim Cook, but it wasn't. It's probably, I don't know when Fed Speaker Bullard was speaking, but there was a big market spike here. Let's look back at the S&P on the 5-minute, and there's that same candle. So the S&P went up, so that was probably Bullard speaking, and then he dashed their hopes by saying there probably wouldn't be, or implying there probably wouldn't be any Fed rate lowering coming anytime, at the next meeting. And so we saw that same enthusiasm from Apple, and then we saw it drop. So then the keynote address, I think the good stuff in the keynote address took over, and iOS 13 is a pretty powerful piece of software. And yes, it'll be able to be used on current existing handsets, which means people won't need to upgrade to get all of the features of iOS 13. But we haven't been told yet if all of those features are going to be supported on all of the phones, particularly the photo editing features and the security features. And if they withhold those from existing phones, then that will be a big driver for new iPhones. But I think iOS 13 is just showing that there's more need for faster processors and sharper screens, and that's going to be the reason people are going to upgrade to the new phones. But then we saw it tail off with the rest of the market, but then we saw a nice little reverse towards the end of the day, stopping at the 5-minute cloud. So we're going to see Apple I think we're going to see Apple resume a move up tomorrow if there's any good news in the market. And, I'm looking at it to start coming and tracing out the bottom of the 1-week cloud. And it's something that you could sell calls on. But way out of the money calls. Caterpillar had a slightly up day today for the week, so slightly up day today, still rejected by the 8. We've still got these 2 gaps that haven't been closed. We've also got this gap down here. We've got underperforming, the MACD underperforming here. Caterpillar. GDX, look at that GDX daily candle. And we opened the day here. At some point in the day, we came down to 2161, and then we shot up. So that's a signal. Your gold miners reflect gold and are the opposite of the dollar. Somebody once told me that the dollar, oil, and gold form this perfect triangle that fights with each other, and one of the sides is always weak. That could be oil, and it could be the dollar, but it looks like gold may be getting more popular. The Chiku span broke above the cloud here, so that's a good sign on the daily. And the 50 that had this bearish cross with the 200 is now reversing and is coming back up into a bullish situation. And just look at the slope of the 8 exponential moving average. On a weekly basis, we have resistance coming up at 2269, which would be the bottom of the cloud. So take a look at that. We could see 2269, 2271 before the end of the week, and we could have a traction by the top of this flat cloud here. I keep talking about top of flat clouds because I think that they are magnets, and this could equally be a magnet to pull it down here. So we're going to have to see which way it goes, but right now gold is looking like, or GDX, the gold miners, are looking like a pretty nice solid play. Whirlpool, had a bit of an update today. Still a dead stock in my mind. And WDC, or any chip manufacturers for that matter, are probably a dead play. So we've got, trend line happening in here. Not an important trend line. If it falls below this low or this low, it's going to go below this low and then probably even lower than that.